General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Man, it's gonna be crazy gaps. Let's do higher time frame. New month. NASDAQ. January, boom, boom, boom. This is that quarter. Interesting how the month closed, because today's a brand new month. And we still don't got no bodies down here. But since we opening up with a crazy gap, I don't want to get too crazy with this. Let me get just the key levels. This is all-time high. November's low. This is the next significant low. Just like these, bam, bam. Let's get here for just discount level. And let me get 50% of this range. What a fib. Okay, Control C. Let's do this way. And we'll lock this. Lock this as well. Monthly fair value gap. Cool. From here to here is low resistance. Liquidity line. Coffee's probably hot. That's not that bad. All right, weekly. Where is that level? Here. There you go. Weekly. What's new? Hmm. That low. I wouldn't even say the SMA or nothing. This low looks decent to me. This low. But I think this is not touching that. If it is, then it's okay. Mm-mm. Nope. So here we got equal lows. It's pretty interesting as well. Maybe we're just gonna buy up after all the panic. Alright, that's what was interesting on the weekly. This we'll get the new week opening gap when it comes through. Mhm. These are week highs. This is okay. This is interesting as well. This volume imbalance. Let's lock this. Mm, it's okay. Everything's okay down here. Yeah, that's it. Maybe some. Week high plus all time high. That gap is a little bit interesting, but we're not in that area. Above here, like going back above here, then we start looking at this gap as far as inefficiency. This high, it's not that important to me. As soon as we get up in here, I mean, it's still a target, but it's not like, oh, it's a reversal area that's interesting. H4, I don't think we need. Uh, yeah, H1 definitely not gonna need. Yeah, it's gonna be gap and go or whatever. Mm, all time high. This would be November's low as well. Hold on, wait. December's low is lower, and it's equal lows. You know, we give you this gap too in 50% of the range. Doing 50%. Yep. After here, low resistance, same vibes. Let's see if we got the same vibes up here though. It's equal. We do. Well, mm, some equal lows for relative. Equal lows. This just being if the level itself is. Probably the gap down target. We still got this. This is interesting. I don't know if we have. Oh, we do. We got that gap up here too. This was a week high. Yeah, we don't got all the week highs. This all-time high is just all-time high. Week highs here. Mhm. Yeah, we don't need the H4. We probably gonna cap far away from all this stuff. We probably gonna be looking at PD arrays, ain't no tailing. Where we gonna be. So the macro is the most important. Let's go back here. We didn't have that weird gap, but we got bodies down here in ours. It's probably full. No, it's not. So I wouldn't be surprised if we gap down and started playing around there, kind of rebalancing that area. What is this, the daily too? NASDAQ got strong. People are buying after NASDAQ. They gotta be. Alright, so the charts are done. Let's do the chart work. March. Environment, elevated fear, conflicting narrative. President cycle noise. NQ, volatility spikes without clean structure. Breakouts are coming. SPY sharp down days possible, but not confirmed crash behavior, quote unquote. My focus, expert, emotional price, avoid prediction traps, and trade with prints, not what's supposed to happen. Those are the notes I took from the Larry Williams 2026 forecast. But it's crazy how it's like elevated fear, and it's March day one, and it's like World War III memes out. Might open NASDAQ. I need 13 weeks in days. Everything's marked. Here. Notes, bias, bearish, bullish, neutral. To start the month, we got no. We really are. Narrative context. Tab in. Okay, there we go. War with Iran. The deal will most likely be done soon. The market will resume bullish. This seems to be a regime change. You don't want to call it theater, but it is kind of like theater. Regime change. Drama, and they got new leadership now. Boom. Narrative context number 2. Midterms, election cycles are choppy. And I expect Fed wash, drama, or Russia, Trump drama. Oh, that's somebody's name. You gotta have to learn that. I don't know if I'm spelling it wrong for now, but AI bubble fears, but AI revenue is the only thing keeping the stock market high. MMXM profile scene, we have definitely been somewhat of original consolidation. I don't even want to say accumulating or distributing. I can't say we've been distributing. People have been taking profits. Especially in tech. correlated market notes, if any. Hard to say because the war thing just started Saturday. Boom, chart number 2. Need 13 weeks. Okay. When you say we know it can go, we're getting used to it. Should be better. Got a couple more years, 3 more years. Same. Look at that. I would say the main difference is like, or SPX, SPY, whatever, all the same. Has been the highest volume, and for a few weeks out of February, it was smoother and outperformed NASDAQ. Boom, boom, boom. Correlated markets. No. We're only looking at 2 tickers. That's always the same. Week 1. What is the dates for this? March the 2nd through the 6th. Let's get this calendar. Let's get this screenshot grabber. President Largay, PLG. Okay, Bank of Japan, people talking. It's going down. Euro CPI. This is NFP week for us. The ECB president speak. Wednesday. Take Thursday, Friday off. Let's get CLT. CME don't care. They trying to trade everything. They trying to trade Solano, XRP. They'll put a contract on it. Let's put this on the Notion. Okay, they're closing a lot of shorts. That's bullish. But the news. Might just flip. Like, Bitcoin dropped off war news. I think it's positive. Now, one day after the news. So, we can't just say war, market down. War, market down. Gotta assess. Gotta look at the environment. Okay. Commercials are super long. And the non-commercials. Super long. Wonder why non-commercials are adding shorts. Guess they see it coming. Let's put it on chat. Larry Williams. Yeah. So the market is, as a whole, is modestly short. Just the net market. Total long, total short. Smart money selling. Public and funds are buying. The imbalance is dominated by commercial selling. Commercial hold 87.5% of open interest on the short side. This is not a neutral reading. Okay. Commercials with net short space and net long. Distribution phase. Increased volatility. Risk of downside break. Potential fail upside break. Yeah. Downside edge. Short term chop is possible. Nasdaq often shows seasonal strength early March, but weakness tends to appear into late March into April. Commercial selling. Potential seasonal rollover window set up for swing short into early spring weakness. And put this on here. Why did it double that line? Hmm. Okay. Looking at the breakdown. Okay, see. He's looking more at the total open interest and what positions are closing and opening in the open interest. And he combines that with the total positions. Boom, boom, boom. Alright, let's do SPX or SPY, whatever they want to call it. Yes. Here we go. So you're looking at this percent. They got all the long open interest and the short. They not doing nothing but shorting over here. So looking at the total open interest. No, not commercial. Is heavy trying to short. Non-reportables alone. So they the only ones that's buying this nonsense. Let's go here. This is the SPY CLT. This is a very different animal. It says strongly bearish. KOI increase. So you got new money entering. Net market, net short overall. This is unusual. Large funds are short, commercials are buying, small traders are bullish. This is not a normal late stage bull configuration. Large spec get this aggressively short while commercials are buying. Often signals late stage decline, possible short cover rally, fuel for squeeze. Large specs tend to be trend followers, commercials tend to be value accumulators. So commercials are saying we'll buy here. OI expanding, specs pressing shorts, commercials accumulating long, volatility expansion, potential upside squeeze, fail breakout possible. This is not a bearish continuation configuration. It smells like a short trap. Yeah, you don't even know it because it's the AI. It's like you don't even know what the news said yet. Wait till we get this week's guy. It might be nobody bought the market. You just never know. But they have to kind of buy something for the hedging game. If everybody's selling, they have to buy. This is interesting because Nasdaq is the best sell this week based on cotton. If the sentiment turns bullish, which I doubt, then SPX would be the best buy. So Fed watch, they not gonna do nothing. Maybe the war changed it. How you gonna call this support? Yeah, they gonna call it all kind of stuff. 92% no change. $92 no change. Fed fund rate earnings. I don't like learning plug. I remember playing plug in the options. AVG. Oh, this is a good one. Let's go. Top 10. I don't think it does anything though, because I was excited last time. The AVGO, and then it didn't do nothing. It was like, man, Nvidia told us what y'all was gonna do or something. AVGO report. Wednesday after market. It is. What number is it? Go to Slick Charts. Nasdaq. Number 8. And Nasdaq. See what the sentiment talking about. Sentiment is bearish. Bearish. And charts. 9 weeks of days now. 13. Let's get these days. Boom, boom. Let's get this Nasdaq. ankle point interaction to readjust. Open, but right now the anchor is all time on. Store the price alignment or market. We engaging. We bone crusher soon. Let's go SPX. These 9 weeks of days. BM. Alright. Same moves. All-time high. All this the same. Focus on daily profiles. Weekly profiles. Adrenaline intent. A little journal. Case study. Plan. Looking for a swing trade. Conservative. NFP week. And drama. Go for Tuesday. Really crazy. Tuesday. Week 4. How we interact with Monday range. Okay. The work is done. All right, y'all have a good day.